The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon at 877-927-6648. And futures last night opened kind of mixed for a moment and then whoosh, downside. Let me just show you here. And went straight down to the 1893.50 level in the E-minis, that's the S&P E-minis, and then started a stair-step move that went peak A, B, C, D, pulls back, has a rogue wave, a right arm extension, going to all the way to 1928.50 at 4 o'clock this morning, and then turns around, comes back down, makes a cup formation, retests that level, goes slightly higher, which makes it for the day 1928.50, and then pulls back and has one quick stab to the upside, a jab, I should say. 1929, oops, shouldn't mention that word, the number's 1929. Anyway, 1929, and then peak E, and it starts to pull back very sharply. So now we've got a leg C down. I think there might be a bounce and a retest. Now, this is what I said to subscribers over the week. I sent out, I couldn't even tell you how many charts. I spent a lot of time. And all the time had to do with not where we are. It was really a matter of where we're going. And the big question that I had, I mean, I've been getting emails and questions for days. Does this mean that the general market is not going to make, at least the Dow is not going to make new all-time highs? You know, that's a great question because it is, to me, it is the only question. That is the question. So coincidentally, I got an email today. I always get emails from folks around the world sending me emails about, because they know I'm looking for mega things. In fact, it's not even mega anymore. It's the giga. We've gone to the giga phase. There are so many factors that have come into place that I've spoken about over the years in the socioeconomic trends that we're looking for. That would be the high price of houses, the high price of cars, et cetera, et cetera. To me, that's just part of what I'm looking for. What I'm looking for is, for instance, in 1929, in August of 29, when the Empire State Building was announced, the world's tallest building, it's not that they were making the tallest building. They had been making it previously. The Chrysler Building was a fantastically beautiful building. But what happened was Otis Elevator had designed an elevator that could take you much, much higher and quicker. So I've spoken about this many times. Apple could never have come up with the exquisite, or Steve Jobs actually, Jobs, could never have come up with that exquisite design if he didn't have the type of glass that would not break. If he didn't have radio speakers that were tiny but very good, that he didn't have microphones that were extremely sensitive and could be micromanaged, made tiny, tiny, tiny. All these things have to come together to be able to create something that is so innovative, so creative, that how can I put it? Like a Stravinsky Rite of Spring in the early 19 teens, 13, 17. It has to be such a breakthrough that it creates the platform for the rest of the 100 years. Edison with a light bulb, next 100 years. And that's exactly what we're looking at here. What, in effect, am I looking for? Because when I'm looking for a top, I'm looking for a major top. I'm looking at a top that says capitalism, this is when I have to have a drink of water. It says that capitalism is going to be politically, socio-environmentally, and for whatever reasons, under extreme pressure and duress. So I spent a lot of time over the last few weeks, and especially over the weekend, and then I got this email, and it says, Manta Ray cruise ship City of Marians. Is this the future of cruising? Now, for some of you who might remember, I spoke about this way back in the early 2000s, and I'd mentioned that going into the 1990s, 1999, 2000 top, I was talking about mega cities. These are cities that are basically floating cities with their own police force. Everything about it was just total isolation out in the ocean. Personally, I'm not sure what you'd really want to do when at any point in any given year, you've got these tsunamis. I mean, anyway, well, forget about that. Most important thing is this is a boat that's boasting a length of 9,000 meters and a width of just over 5,000 meters. And what I'd spoken of back in the early 2000s, then back in going to the high of the top of 2007, I spoke about cities of 6,000 people. In fact, I won't be able to find it now. I can't stretch up enough. In the, I can. Hold on, here we go. Let's see if I can find this. Chapter 13. What does it start off with? This is the mega bull market still to come. No, the stock market hysteria still to come. This is a chapter that I wrote way back. And the opening chapter says, there we go. The mega bull market, stock tickers at McDonald's, record high sculpted skyscrapers, 250 mile per hour, luxurious grand touring cars, 4,000 passenger ocean cities to nowhere. As the supercharged Dow accelerates to ever-increasing record highs, most of the socioeconomic perils of the mid-1920s point to a mega move in the Dow just beginning to unfold. The seeds of a surge into the decade of the mega trends have already been sown. Chapman Market Line, summer 1988. This is chapter 11. I thought it was chapter 13. Chapter 11. In the Psychology of Investing, Lawrence E. Lifson and Richard A. Geist with the I can't say they were we were the authors. They were the they organized this whole thing. It was part of the Massachusetts. It was part of Harvard's Psychology of Investing in their psychology department series that they had over a few years in the late 1990s. This is published by Wiley Investment. So here we are. This is now 16 years later. No, 1988. So we saw that so then this is after the 1987 crash. Then you got 99 going to the 2000 top. That's where you start to see all these mega cruise ships. But now we're getting cruise ships that are even bigger. I can't believe we got a break. Let me just run the numbers here. The Dow is, let me just do this real quickly. Here we go. The Dow is down 10 at 16,337. S&P is down 5 at 1918. Comp index is down 25 at 4617. And we've got gold down and copper's a little bit up. I'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Oh, that's a pity. I think I lost it. I had it. I wanted to show you a design of this particular. It is incredible. It looks like kind of a hovercraft thing. It's not a hovercraft, but it's an amazing thing, and now they're using all the technology. Okay, so this is what I wanted to say. So I've spent a lot of time. I'm going to take a little bit more time. There's no real rush because the markets, the charts are already bearish. I'm expecting that we're going to have some bounce. We didn't have a climactic low today. I said there were two choices. One was two chart patterns we were looking for. One is to have the futures either sharply down, then rally very sharply, and then spiral down to the lows of last night, scare the daylights everyone, have the volatility index scream to the upside, and then have a reversal later in the day. Or, and this might be the more likely one, is that, and that would be replicate the August the 24th low, except we would have a number of them. They'll keep using up the spring to go to the upside, will get weaker and weaker. So this is what we're looking at here in the VIX. The VIX is lower than it was on Friday. The high was 27.08. So far today is 26.57. Maybe it's making a peak D. The technicals are improving, so that says that the market could rally 200-300 points even. But there's a good chance based on the daily and the weekly chart. Let me move this away for the, and here's the monthly, that the VIX is going to remain in the 20s this week unless it's a spectacular rally. So there are a couple of things going on right now. Okay, so the concept still remains that I believe we will have that wave 5 up in Elliott, and I believe, and it could come from much lower down. I discussed that when I did that webinar, that we need to see an all-time high in the Dow for me to even be able to think that way. But once we do it, it raises the base and it becomes very important. Otherwise, we're just going to have a traditional, some kind of a traditional consolidation here. And does it go the 50% or 80% that some people are talking about? You know, I'm seeing different reports. I saw a lot of negative news over the weekend, heard a lot of negative news. And in the den, it said that there was most analysts were saying it was a good buying opportunity. I've actually heard both, to tell you the truth, but very selectively, and I can't use anecdotal, couple of people here, a couple of people there. I need a lot more than that to use more than anecdotal. So this is what we're looking at here. The volatility index has been rallying, and that's really key to what we're looking at in terms of making the 9-period moving average at 21, some kind of a support level in the Dow, in the volatility index, the VIX index, over the coming week. If we had a climactic low this morning and a little later today, you suddenly saw a V-shaped turnaround, and then we were up 100 points. That to me would have said, great. But I'm seeing too much weakness. If you go through the sectors, let me do this right now. Let's go Dow, INDU, and I'll do the three time frames. For my subscribers, I showed this very large, and this really looks like distribution over here, very large arch formation, an upside down bowl. The longer that takes, then the quicker or the longer, you've got a choice, the quicker or the longer the consolidation. Quick says that we take out 15,860 is the 200-period exponential moving average, which would also be the 15,855 low of October of 2015. Why was that? Why does that say 15? That should have been 14. That's let me just change that. It says it because I typed it, no one else. So October of 2014 was the low of 15,855. But it's really this August low, and that's where we could see these trigger points. They keep pushing in money, and then you go to lower lows, lower highs and lower lows. So far, that's the scenario we're looking at. Maybe it was a little bit stupid to switch from the short side that we took intraday. Yes, on Friday, had a fantastic run from the level that we took the short at, 16,004. What was that? I don't even remember anymore. 16,000, I can't remember. 700. Was it 16,700? Yeah, I think so. And then we just tumbled down from there right into last night in the futures. But now I didn't think that the risk reward was that good to hold because we've used up all this energy to the upside so far, and the testing has not really resulted in a major move of double digits down in the S&P futures. Day's young. We haven't even gone 2 hours into the day. Anything can happen. And it does make me a little nervous to see that some of the shorter term indicators, like the VIX is holding up pretty well right now. The IBB, which is the Nasdaq biotech sector, which we've been short from 391, is at 291 right now, 292, I need a little bit more evidence that there's going to be more than just a bounce. So we're watching this real closely. But yeah, look at the MACD's cross negative, stochastics at 51%. The 9-period moving average is down. It looks like we're headed for 15,860s in the 200-period exponential moving average. I think before we get there, there's going to be a bit of a bounce, and I showed all the patterns that I'm anticipating to subscribers over the weekend and all those charts that I sent out. And now let's look at the monthly chart. And the monthly chart says, hey, be careful. This Chapman wave uptrack that we've been in, I wonder if I can expand it just for the moment. Yeah. This uptrack says that at any point, if the Dow in January starts to test 15, it breaks and closes under 16,000, you got to start being real careful, because that'll be the first break of this up channel in a long time. And that goes to the 15,370 low of August the 24th. Okay, let's look at the S&P. So the Dow has had just a crescendo to the downside. And what I said is, it's a big deal. We have a rally. We have a rally all the way to Thursday's opening price, or maybe Wednesday's low. I mean, that's the way it is. That's how these V-shape works. Unless we get the trigger for a major move to the upside, I see no reason to even contemplate that just yet. All right, so that's the Dow. SPX, so upside resistance in the Dow is in the 16,700s, and the downside says you got to be real careful. S&P is at 1917, down 5, and what we're looking at is the weekly chart is gone in this arch formation. It hasn't yet tested the uptrend line, and that uptrend line says 1891 is the key support there. So the monthly chart is the one that looks like that peak G is in place, and you've got that Chapman wave arch formation, the H. Remember lowercase h that I always talk about? And that suggests strongly that because we're trading now halfway into the Chapman Wave Roman candle wick, that sometime, maybe even this week, we could be testing the low that was made in August of 1867. Upside is a bounce to 1978. Tremendous resistance. Let me show you something here. This is the Chapman Wave projections, the resistance and support levels. Right now, 1903 is a support in the 10-minute chart. 1899 is a support in the 120-minute chart. I didn't want to show that. What I want you to show you is, look at the Dow, INDU. The Dow doesn't have any supports here. And look at all those resistance levels. So my big concern here is that the resistance levels, look at that cluster in the 16,400s on the left side here in the 10-minute chart. I'll be back and we'll be talking about this. Hold on, just a break coming up. Very important break for TFNN. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So I do have I just don't have the picture. That's a shame. That is really a pity. All right, I'll figure out how to get the picture. I'll get it. I'll show it tomorrow. I'll certainly show it to subscribers. So it's an incredible, it looks like a manta ray or something, one of those. It's really incredible shape. All right, well, that's that. Case closed. Let's close it. Do you want to save changes? No? Gone. Gone. Okay, we're back again. So let me do a couple of things here. I just want to show this chart here. It says that there's a possibility that we could have one little dip, and that's going to be the key. If this little dip that tests the low that was just made at 1905.25 in the 10-minute chart, if that really breaks down then we're going to get exactly the scenario that I was looking for. That maybe we have a failure here, and maybe today or tomorrow we get that reversal of substance. Substance meaning 3 days, 5 days. Still thinking lower lows and lower highs. All right, let's just do this. We'll follow it maybe a little later on, see what happens. So that's that. So now we've got the QQQ series plunging. I don't know what that letter is at C in the weekly chart, but in the meantime, this could really be an E in the monthly chart. I have to be really careful here. I want to put, I'm trying to be two people. One is setting aside everything and saying, look, we've got a down phase coming. We're in a down phase. Continue with the short positions. Add to the short positions. Yes, you can play bounces. We like to play those bounces. But the main thing is in the core positions, you want to be looking at the short side. Why? Because we have to be testing the August low of 15,370 at some point. That's just the way this chart looks. Okay. Now, what we want to see is areas of support. I had a question about Google. Look, Google to me, this is a weekly peak D. This is Google, not Google L, not Alphabet, because this is just plain old Google. The monthly chart, let me squeeze this a little bit there. Monthly chart is gone, it's extended. It's gone to a G/C. Still could go to a D later on. But right now, I think it's got a problem. And that problem says that gap should be filled. And the gap is below 701. Let's call it 701, with a huge drop down to 657. That is a 43.44 point gap. So somewhere in there, I'd be looking to see what happens with Google. Very important stock in the whole, actually in any way, technically, market-wise, for the Qs, socioeconomically, the whole situation. They're in everything. All right. So now a question again about IBB. Yeah, let me just show you. IBB right now, my target is still a retest of the 280. Whoa, 290 now. It's down 290. Look, there's that H pattern, broke the support level. The monthly chart says it should at least test 284. And that's going to be the big thing. If on a weekly basis it closes for 2 weeks underneath 284, there's no stopping this thing. This thing can go all the way down to the low of 247, which is the October of 2014 low. I suspect that we're really close, because now even in the, what newspaper, where did I say? Oh, even in the Boston Globe today, it said biotechs could be in for a tough time with China. Hey, China Schmina, let me tell you something. They're in for a tough time because they've got a peak D top in the monthly chart, and they've made the H pattern, that pattern I call the dreaded H. I don't see these things coming back for quite a while. That's that. All right, now a couple of questions we had here. Well, I look at, so I looked at that. The question was, second email was also, look at the, this is not gold. Oh, XAU is down $1.88. Wow. Okay, it wasn't that, it was the XAL that I wanted to look at. The XAL, well, everything's going to L here. Good grief. All right, there it is. I typed in. Oh, I took it away. The right side of the arch is right there. The left side had a low of, this is the airline, ARCA airline index, trading at 76.91. Trading at 77.31, down 75 cents. 76.99 was the low of August, the week of, that was on August the 24th. And so far, we've gone to a low of 77. We're at the low, 28. We will be testing that, but my thinking here has been for a while that the 75 area is the 200-period exponential moving average, and that's probably where we're going to see the biggest test for the airlines. So the question was, hey, crude oil is way down. What the heck's with these airlines? And the answer is very simple. The answer is that we've probably been in some kind of a recession for a while. And you know that the moment that the economists say, this goes back for me from the 1970s, the moment the economists say, recession is over, oh man, you better be careful, because the recession is probably back again. And then look, the United Continentals makes a peak G way back in January of a year ago at 74.52, plummets down to 49.20, rallies up to 62.21, and now it's all the way back to 51. This is not a good sign. That's the reason why I feel I've got plenty of time to be talking about the next move up. I need to see how we can I need to see, first of all, today was very important. If the futures were down 18 or 22 at the open, we could have had a crash today, like August the 24th. Not a crash, but a really bad day. And then later in the day, right at the end or towards tomorrow, we could have had the V-shaped turnaround. And that would have taken us where? Back to, as I say, last week's levels. But most importantly, now we can have rallies that are normal counter-trend rallies in a bear market. We're in a bear phase right now in the daily and the weekly. Haven't had anything in the other than my anticipation that the monthly at this particular point is making an H pattern. And I would have to say, maybe even by the end of this week, I can say, yep, the monthly is absolutely in a sell mode, because we've had 1 month. I need to close at least 2 months under the 200-period moving average, under the 9-period moving average yet again, and break the key support. So I don't want to even talk about the monthly. We've got the weekly and the daily Dow in that kind of territory. Okay, so those are the things that we're looking at. Well, look at this, high-grade copper. High-grade copper, was mentioned, Larry spoke about this recently. He said, used to call it Dr. Copper, because when copper was doing well, it just indicated all around the world there was building activity, people wanting copper. Well, now copper's gone to a leg E in the continuous contract monthly. This is just not a great sign. So the real question is, am I nuts? Is there even a possibility that we could make a new high? I've got a whole scenario that we can look at. I don't want to muddle my thinking right now. My thinking is bear market. We had a huge move to the downside. We had a follow through somewhat to the downside today. I would like to see a bounce. That bounce is going to go not that much higher, but high enough to really get the bulls back in charge again. And as they get in charge, someone pulls the plug out of that charger. So that's what I'm looking at here. There were a couple of questions as well. Celgene, look at this. Yes, Celgene, and just guided lower. Oh, they just guided lower? Celgene, the wonderful Celgene with the peak E top. I'm going to put down a down arrow here. So this is the question. If I put a down arrow there, why on earth did I not put a down arrow in the Dow? Because I need to wait the month out. I don't need to wait the month out now because it's part of the IBB. MACD is horrible. Stochastic's horrible. Weekly is horrible. Celgene is the next level of support is the August low of 92.98, and it's at 100.85 right now. So that's all you got to think of. Does it give me time? I can do time in a different way, but it does say within the next 2 weeks, could be sooner. Celgene should be testing the wick of that candle of the week of the 28th to 1998. Hey, time flies. Good grief. Another break. I'll be right back. Basil Chapman, Thai Technicians. Now, hey, I'd like to hear from you.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. So you saw, for those of you looking at the charts, you saw my 10-minute chart. I made a cup formation, and now we're in leg B, and the Dow is up 38 at 8.85 cents. So all this is fine. It's really part of a very short-term base building, and we will see, because this is still the case that if there is a sudden slide to the downside, you take out in the S&P minis, you take out 1902, 1900 as support, that will just make that VIX index scream to the upside. And then we'll have to be looking for the rest of the day. Oh, I should have said to subscribers, wait for me for 3:30 or 3:20 follow-up. Anyway, we didn't do that. So this is what I'm looking at here. And I want to make something very, very clear. I had a couple of questions which seemed to me that it wasn't clear. I thought it was clear, but I'm going to say it again. I have sell signals and sell modes in the daily and weekly of almost all the indices. I shouldn't say almost all, virtually every indice, right? And that says to me, I've got to be looking at the downside. I don't really want, unless it's a short-term trade and we're going to use one of the ETF proxies for the Dow or the S&P for the upside. That's all I think at this point, that might be all I do, is we trade the index on the upside for bounces, and we keep trying to grab stocks or indices as well for the short side. Just making it clear that outstanding wave 4 in the Elliott wave, wanting 5 to come, my anticipation that there should be some kind of a new high and another move up because of all these things that I'm seeing here in the spectrum of waiting for a major announcement of a major skyscraper. Remember, I said back before 2000, I said I believe that it would probably be a figurehead like a Trump. This was back in the 90s, that would announce it. But maybe it's not a figurehead announcing the skyscraper. Maybe what we're looking at is someone who's maybe epitomizes capitalism. So I'm looking at this in a completely different way. I'm going to take my time. I have no buy signals now that say this is the buy signal that's taking us to a new high. I don't even see how that can come until we test 15,370 in the Dow. And we're not that far away. We're 1,000 points, so could do that in a day. But that's really what I'm looking for. So those questions. Question came, the Dow. Did you say you're looking to see all-time highs, wave 5? When is the best time for this? During 2016 first quarter, second, third, fourth quarter? I've got a whole template that I'm working on. I just need to see how things resolve. There was for those people who became bearish, it was huge bearishness going into the weekend, going to Sunday night. And for those that are just Pollyannish, buy and hold, I think there has to be a tremendous scare to get them out before they can get back in. So that's the scenario. Other question I had was on the S&P. If I can just find the right mouse here, S&P question. How do you look for a bottom? Well, I look for a bottom in many different ways. I look for the parallel. What would I be looking for? I'd be looking for, in this case, in the S&P, I'd have to see how it tests the low that was made at 1867.01 back on the week of the back in August of this past year. And if we take that out decisively, I don't see anything until you test the 1820 level of October. And then that says, wait a minute, how on earth could you have an all-time high? Because in the Chapman wave, you'd probably have to go leg A, then a B, then a C, and then finally a D in the monthly charts. That would take more than 2016 to achieve. I understand that. It could turn out to be just a rogue wave, that is just the Fed doesn't do whatever they said they were going to do, and either they lower the rates or they're forced to, or it's perceived that they're going to be low rates, and there's this artificial move to the upside. I need it for many reasons. I don't know what that's doing there. And I'll deal with that. So just making it as clear as possible. I want one step at a time. The step right now is that we're looking at downside activity in many of the indices, many of the key stocks. Just want that cleared up. When we get to some area that I think is potentially the low that could hold, we'll talk about it. I don't see it yet. Just wanted to clear it up, that's all. Because maybe I talk a little fast. Maybe it's a South African accent. Talk about South African accent. That rand. We spoke about this ages ago. I said the president of South Africa, the chiefs, who's ever come in, each one has been determined to follow the Zimbabwe rule. And that is to make inflation and to spend whatever they can. It's not a good situation. And you'll never read about this in the press, but the racism in South Africa right now, the reverse racism is, I don't even want to go there. It's uncanny that it's not been spoken about at all in the press. And that's a shame, because many of us spoke about it the other way around for a long time. It's one of the reasons why many of us came to the United States. So, all right, well, let's get on with this, and we'll go on to the Dow. I wanted to show you something here that's quite important. And one of the features that I've been looking at is INDU. It's in the context of a very sharp move that took you remember the parallels that we were looking at? Maybe this is the best chart to go. Let me go here. I'll go to the one here that I always show, right there. This one here demonstrates very much why I was looking for the chance that if there was a very sharp futures break to the downside last night that held into this morning, or there was a rally that fell and then we went back down, minus 20 something in the futures, or 20 or 30, you could get that August 24th plunge to the downside. What this is saying to me now, it feels horrible, doesn't it? But you know that we've only gone from 17,750 to the low of 16,000. What's the low today? 16,302. So 302, that's 1,400 points. We've gone to it feels like it could be 24 or 3,400 points, but no, it's way less than what happened right there. Look, that one went from 17,568 to 15,370. That's a 2,200 point decline, double. Then this one here, it doesn't look like double. Wait a minute, am I right? 17,568 to 15,370. Yeah, 2,000 points in 1, 2, 3, 4 days. And this has taken 1, 2, 3, 4, 5, 6, 7. Today's the 8th day. So, and it's made a new low. That's why I have to count it. So you can see that we've used up price to a certain extent, but more time. Here you used up price and time. It wasn't that much time, but it certainly was time. So let's just say here it was priced. Here it's more time. So this is going to be very interesting. Why? Because it says I can even draw this in right now. Let's see. You could get a little bit of a bounce, and then all of a sudden people feel, phew, we're a little bit out of the woods there, and you can have a rally, and that rally could take you up like this, and then we come back and we do a retest. So it was really disappointing. Well, the day is young, but it's been very disappointing that we didn't get that climactic sell-off to have another one of these rallies that could take. I don't think it would take as long as this. I don't think it would be more than 3 days, could be 2 weeks to the upside if we had that kind of climactic low today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
5-minute E-mini chart has a 1904.43 support level. The low became 1905.25, and it smashed through the resistance of 1912. So this is now it's testing the 200-period moving average on the 5-minute E-mini. So this arch, this cup formation, same as the one before, now has a greater right side, and that's really positive. And if the market's able to hold, I want to see the VIX index start to slide. What is the VIX index right now? It's at 25.24. Oh, I did have a Chapman wave. One of the reasons why we wanted to switch to the long side, unfortunately, we got stopped out of a small loss, but I really wanted to switch from the short to the long side in the Dow. Was because I have a Chapman wave trend gauge, which suggests that a rally of between 9 and 11 points in the future should translate to a nice move in the cash indexes. We might have used that up already, but anyway, it certainly did work. But now what we're looking at is that single leg down. Remember, we broke that left side and we were matching. Now, because we've actually formed some kind, I'm not going to rush into it. I was going to draw a trend line there and say it's just nice to draw trend lines I haven't got confirmation yet that I can draw the trend line. If I would draw the trend line, it would go from that level to that level and would go straight. In fact, I'll do it now to show you what, just to demonstrate a technique that you might want to use. And this is, you've got one level of support. Not good enough. I want two levels. I want to show the Chapman wave inside track. And now I've begun to start to call it the Chapman wave up track. Just cut out all the words, right? So the up track, that's a little too thick. I like it to be reasonable. Let's go to there. That says that if the Dow at any point today or tomorrow, without taking out today's low of 16,302, is able to climb and then close, it's no good to climb, it's got to close, and that's another 110 points or so above 16,500 was a rising trend line. Let's call it 16,520. That'll say, great, now we can do this arch formation and say, hey, a little bit of a relief rally on the upside. But the trend remains down. I just wanted to emphasize for those of you who asked the question about the all-time highs. So I'm going to still hold it out there as a possibility. I don't yet have all the evidence that I need to say that it should happen. I've got a lot of evidence that says if the icons that I'm looking for continue to unfold, like I just got the email today, I believe that we should have a move to the upside that at least tests, if not breaks, the all-time high. But I don't have all the parts of the puzzle. I just want to clarify that in the meantime, until I get a signal that says we've got a new buy signal in place, we have to consider that even these counter-trend rallies are going to make lower lows and lower highs for a little while to come. Just needed to get that out there. Okay. Oh, this is the final few minutes before you go to your swim lesson with Think or Swim. That was a great show, great options, lessons as well as positions, and just generally, I mean, I can't believe these TFNNs giving these lessons like that. That is amazing. So, okay. Now we've got to go into the final thing, so we make it real clear. The VIX at this particular point is trading at 25.44. It's down $1.57. Based on the 120-minute chart at peak D and having hit a resistance line, I'll do this very short term, and it made a left side, right side price time match a little late, but it did it. Testing, I said to subscribers, we're going to see if it tests 26.81. It did that, and it went to a high today of 26.57. If the VIX starts to slide, it really has to slide. You're not going to get a rally that's sustained unless the VIX slides. The VIX has to go down, and it really needs to close below 24.40. A point from here, with the Dow at up 100 points at near the 16,450s. That'll be good. I'll be back tomorrow. Have a great.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,